Right then, hello everyone, and just a quick update from us again on markets over the course of this week. Next week we'll take a little bit of priority in this video, but I'll quickly cover briefly what happened over the course of this week, just because we've had some interesting developments over the course of the back end of this week, some interesting price action rather than developments, but we will have a look all the same. But yeah, have a quick look across this week. What we had this week was a raft of central banks. We had the RBA out on Tuesday, we had the Bank of Canada out on Wednesday, and we also had the ECB out yesterday, being Thursday. The RBA hiked interest rates by 50 basis points, the Bank of Canada by 75, and the ECB also by 75 basis points. Now, the rhetoric surrounding all of these rate hikes was quite similar. The central banks are going to continue to hike interest rates, but they are going to be data dependent going forward, and are largely by a meeting basis. The Bank of Canada did not comment on being massively data dependent. They did say that they were going to hike interest rates again. They're a little bit more clear cut, but the RBA and the ECB did pretty much conclude that they were going to continue hiking interest rates. So that's what we have seen out of the major central banks. And not a large difference between them all. Not a large difference between them all. But I think the interesting thing to end the week would be just to flick across markets. And we'll just have a look across the price action that is developing at the moment. We can see up on the dollar index rejecting 110. Right, we come to dollar CAD, as you can see up here, rejecting 132. Down to dollar Swiss, we've posted a big bearish engulfing today, not rejecting off a level, but still a big bearish candle all the same on dollar Swiss. Come to dollar yen, that'll be a nice shooting star directly off 145. That's again another bearish indication. We come across to the Aussie, rejecting off these lows in the form of a piercing pattern. Come round to the Kiwi, and again rejecting off these lows. Not as clear cut in the Kiwi, arguably probably looks the most bearish of all of these majors. Looking at Kiwi, we will come down to euro dollar then again, and euro dollar posting a big bullish engulfing again. Is that massively significant against this trend? No, but it is a bullish engulfing candlestick all the same. And we see the last couple of times with bullish engulfings, this one back here, we had a couple of weeks of upside again, not a massive deal of upside, but a little bit again. Triggered another correction. This bullish engulfing here triggered another raft of buying. Then after this bullish engulfing back here, did trigger a couple of weeks of sideways price action. So if history is anything to go off in this trend, these bullish engulfing candlesticks in the weekly do mean for at least a bit of a correction for a week or two. But we'll have to see across other markets and have a look towards next week to see if that's what we think. But I think a close above euro dollar is a close above parity on euro dollar. Again, is a little bit to go off for next week. And then cable is just cable is just, as you can see, I don't have many words to say about it. It is just dumping, and it is dumping, and it shows no signs of slowing down. So clearly, the cable seems to still be a sell-on rally looking at the charts, but that will come into next week to bring us into next week when I'll speak about that. But then again, looking at the stock indexes, we can see the Dow Jones potentially printing a bit of a left shoulder head, right shoulder, as you can see here, a bit of an inverse head and shoulders, which would be significant as the fact we've got a piercing pattern on the right shoulder. Now, is this potential for a higher low to be created and put in? We'll have to see coming into next week, which may be an interesting week. This is a little bit more tricky in terms of a head and shoulders, or inverse head and shoulders, should I say. But again, the same sort of pattern is emerging. We come across to the S&P, that's quite clean, and then we are actually rejecting this little bit of a level across here as well on the S&P, which is definitely of significance to me. So it does look like stocks are trying to form a base at the moment after a pretty heavy sell-off for 3 weeks, but a bullish engulfing on the S&P on the weekly, rejecting off a level, potential right shoulder of a head and shoulders, is definitely looking slightly bullish into next week. We'll come across the gold then, another asset to look at is gold. This big level across here that's held for a while, that is holding at the moment. The trend is still down, but it is rejecting off this big support level down at the round number of 1700. Now, what we're seeing is a bit of broad-based dollar weakness to end the week. Broad-based dollar weakness will help stocks higher, which is quite interesting to end the week, right? We'll come across to the calendar and we'll have a look at the calendar. We'll just swap this on to next week. And what we can see here then is the CPI print out on Tuesday out of the USA, right? Now, the inflation rate is what is driving these central banks to these aggressive rate hiking cycles. So inflation is what they're going to have to look towards to understand maybe when to stop, right? If we have a look at this inflation print out of the USA, if we just click into there and just scroll down a bit, we can see previous numbers. Obviously, it was an uptrend, rising. We posted 9.1 back in June. We posted 8.5 back in July. If we then come to August and we look at consensus is now for 8.1, a further drop. 2 consecutive months of substantial drops in inflation shows then that these interest rate hikes are working, and that would then, if the central banks are going to be data dependent, and we see 3 consecutive lower, or 2 consecutive lower, but 3 since we printed a high in inflation. Is that the peak of inflation? Is that 9.1 print back in July the peak of inflation? If we can get 2 of these consecutive months pushing lower, and the central banks are going to be data dependent going forward, that is definitely significant in terms of slowing down the pace of these rate hikes, right? We'll come across to the Bank of England, and again, we're expecting Bank of England more of the same from the central banks, another 50 basis point rate hike. But what we do have is inflation out of the UK on Wednesday of next week. And again, if we can get some weak numbers there, they're expected to be positive, but the Bank of England did predict that we were going to be at 13.3%, I believe it was, in October. Another 3% added on top of that over the course of September. That'd be tricky to reach. I think that would be tricky to reach. So any sort of negative data surrounding the CPI print on Wednesday out of the UK is probably definitely something to keep an eye on. So that's what we'll look towards for next week. To get some weak inflation figures, that might cause a bit of upside in sterling, which I think it needs at this point. But sterling is definitely not where I would focus my attention if I was looking for some dollar weakness. Some other assets are probably better, maybe dollar yen shorts. Euro dollar is always a good proxy, but certainly if stocks continue higher, your Aussie and Kiwi are definitely ones to keep an eye on heading into next week. And the dollar giving back a bit of gains back end of this week, some pairs rejecting some significant levels, with stock indexes looking like they're forming a base into next week with the CPI print 2 consecutive prints lower. That would probably make for some good longs on stocks heading into next week, which will then open up some doors. Hopefully you can get a pullback in the dollar that will create some good trading opportunities, or the dollar continues its trend and we can continue to buy the dollar. So I definitely think there's opportunities going into next week, both sides of the market, but maybe an indices rally next week. We've had one this week. Do we get a bit of follow through next week? I think that might not be a bad idea to keep your eyes focused on stock indexes heading into next week. But yeah, we'll update more on that next week. We'll have a look again next week to see if that does materialize. But for now, it is the weekend, it is Friday, but we have then experienced the death of, obviously, Queen Elizabeth II. For any of you UK listeners, for anybody part of the Commonwealth, obviously we send our regards from LAT. And yeah, definitely be a few days of mourning. There'll be a lot to do with people over the weekend, but we will have to see. We'll have to see how that plays out then, or see how markets play out going into next week. But yeah, for everybody then listening to this, I'm going to wrap it up there. Then thanks for listening again, and we will be back next week for another weekly market insights. Thank you.